Welcome to Insights. I'm Eric. I want to do a wheat review here. Wheat has produced a reset in the evolution of the trade. We're going to discuss this with 4 subscribers, and I'll have a bit of it for open content for people to read so get introduced into the evolution of the trade. And then I'll cut it off and we'll talk about specifics of this particular setup. The evolution of the trade follows the alignment within the monthly, weekly, and daily, tertiary, secondary, primary trends. The primary trend is the most important. The primary trend flipped out 5 months ago and has produced a 10% return. This is the same type of mechanics that we use, the trading discipline. The evolution of the trade is going to be the exact same whether you're buying stocks, wheat, any type of commodity, natural gas, Bitcoin. It's all the same. You're following the discipline that follows the primary trend. We watch energy within the primary trend to understand when corrections are a high probability event, and then when the trend realigns again, creates these resets, yellow highlights, which you'll see in other markets, you have to decide whether or not it's a reset that you want to chase or you're just going to sit and watch, and we're just going to watch and play in the primary trend. We'll always play the primary trend until it flips down or it gets old. This one, let's take a quick look at that. The primary trend's been up for 5 months. That's the 5 count here. The bull cycle is minus 0.3, which means it's still, the profits are not outlandish in terms of what wheat can do. The time cycle is BUST. It's still below 0 and negative, which means it's 5 months is still below the cyclical mean of a normal primary trend. So there's lots of time there in the primary trend. The secondary trend's a bit more extended, and this is where the concern lies. Perhaps the correction that took place in the daily would bleed over into the weekly. The weekly cycle is 2.1, so it's a little bit extended. It's statistically well above the normal mean at 22 weeks. The time cycle at 22 weeks it's not red, but it's above its mean as well. So the weekly, it's a little bit on the dangerous side. It's for something that you would chase. I don't think I would chase this with leverage or otherwise. But the daily did flip, and it means in the computer signifies the composite score at minus 0.31, so it's still relatively low, and this is designated a early cycle. Whether or not we want to chase this kind of reflects about the discussion here in the weekly, and then we're going to take a look at energy. So at this point, I'm going to stop it for open discussions, and we're going to continue on for subscribers.